All right, all right, all right. One, two, one, two, one, two. Check, check. Yes. Hello, hello. All right, all right, all right. Ladies and gentlemen, welcome to Trades by Bren. How you doing? Good morning to you. I'm Bren. Welcome to the stream. This is what we do every Tuesday and Thursday, 7 a.m. Pacific. If you don't know, now you know. Good morning to you. 3 rules of the chat. Let us know where you're streaming in from and your name. Okay. Let us know in the comments right now. That's rule number 1. Rule number 2, good vibes only. Rule number 3, talk to each other, not just me. Why? Because we're building a community, the most positive, most supportive trading community on YouTube. Better believe it. Mark my words. We're looking at the SP 500 futures, some chart analysis. This is the overnight chart. There's the electronic trading hours. That shows the overnight price action. And then there's the regular trading hours if you're using TradingView like me, which I do recommend. Link in the description. Now, what I see here, all I can tell you is what I see. I see a double bottom at the low of yesterday. Now, if we switch to the regular trading hours, you can see that was yesterday. We were sideways a lot of the morning. Well, we started with a strong breakout to the upside, and then we actually drifted down, and then a little bit of a breakout to the downside, but bouncing right into the close, which was the low of yesterday. So I marked the low of yesterday. That's one of the first things I always do. Okay. Always mark the low of yesterday and the high of yesterday if they're close. If they're far away, I just mark whichever one's closest. So that's step number 1. Step number 2, I look at the electronic trading hours and I see what happened overnight. Because sometimes, and very often, there's been a lot of moves overnight. Now, if we switch to the electronic trading hours, not much went on overnight, right? Like that was, this was the end of the day, right? That dotted line. Now let's look at how much action there was. We can measure it. 20 points of action. We came down here, we bounced and we drifted up. We came down here again to test that price. We didn't even get there, okay? And then we started drifting up. And now we've been going sideways into the close. So the next thing I'm gonna do is I'm going to mark the trading range. So that's a trading range. And we mark that yellow because it's about neutral. Now, the longer the market goes sideways, the more you can get a breakout to the upside or the downside. That's what happened yesterday. Now, yesterday, if we go back to the electronic trading hours, all right, follow me, 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 right? This was a breakout strong enough for a move higher, okay? Because it's the same kind of thing, right? Like we had a double bottom here with a double bottom here, and then a strong breakout to the upside. So when you have a breakout like this that looks good, right? Notice that the bars are stacking like Lego blocks. They're not overlapping. See how these guys are all overlapping? And do you see how these guys are all stacking? Now, if they're stacking, that shows conviction. And that means that people are confident, institutions are confident that the price is going higher. And so every time the bar closes, you see strong follow through, strong follow through, strong follow through. Notice that this candle closed on its high and all of these close near their high, right? Small tail on this one, small tail on this one, but generally a very strong breakout. And this made for good probability, higher probability that we would get a move up. Okay. But then notice what happened here. We just went sideways, 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 sideways. Now, after this starts happening for 5, 10, 15, 20 candles, the probability comes back to 50-50 the longer it goes sideways. Because what happens is the other side, in this case, the bears, thwart the bulls, right? They're not actually getting the price to move down, but they're blocking any forward movement, right? Like in football, if the defense stops the offense from getting any yardage. That's the same thing we're talking about here. And then the longer that happens, the more likelihood you have for a breakout to the downside. And that's what we got. Now we went from probability to the upside to the opposite actually. And we got how much of a down move? We had a 40-point move down, okay? Which is not that small. It's not that big, but it's not that small, right? In fact, that was the biggest move of the day, right? This is the whole day. We had a 30-point move in the morning, and then the rest of the day, we pretty much drifted down. I mean, technically, we were drifting down here because you've got lower highs, but this was very trading range chop, and then boom, breakout to the upside right there, okay? So what are we looking for today? Now, as I said, I marked a double bottom here on the open and a trading range, okay? So I'm waiting. So far, we've shown that the bulls are saying, you guys are not getting past, bears, you're not getting past the low of yesterday. And if we look to the left, look to the left. The bulls have defended this price for many days, okay? Many days. All right. But look what happens when we get to the moving average. Moving average is the blue line. The bears start selling at the moving average. So overall, this is very rangy. This is very rangy, right? It's very choppy. It's very trading range-esque. And it's a bit tricky, right? It's tough to trade because you have, excuse me, you have buying and you have selling. And, you know, it's not moving in a clear direction for very long. Like if you were bullish yesterday, and I was, after this, and then this, right? I didn't point this out, but look, this shows the conviction's still there. Okay, so this is what was interesting to me about yesterday. Very strong breakout, strong enough to cause a second leg. Bears got 3 legs down. Count them, 1, 2, 3. Okay, a leg are just bars in a consecutive direction, so you can see there's one there, and one there. And then the bulls started buying as soon as we got below the moving average. So that shows a higher likelihood of trend continuation, because as soon as the price got down here, look at how far we exploded up, right? That was a big move there. We went up 15 points in 2 candles. That's nuts. So bullish, but then this is as far as we got, as far as the bulls go, right? And then the bears just held right here and then reversed it, right? And got that trend trend reversal, major trend reversal, right? Because that's a strong move to the upside with sideways, and then the bears actually reverse it down. Now, I wouldn't say that that's as common, but one of the things I've been practicing, if you're curious, is counter logic. I'm always practicing counter logic. How do you think one way and then think the opposite, right? How can you hold 2 opinions that are contrasting at the same time? That's tough. That's tough to do in life. That's tough to do in trading, but it's really key in trading. Let's give some shout outs to our live stream. If you are watching this, let me know where you're streaming in from and your name in the comments. I'm going to give a shout out to my man, Cynthios. Cynthios! Welcome back, dude. Shout out to my man, Rob. Cynthios represent Germany. Rob represent DFW. And Rob saying it looks like a buy. I think you might be right, Rob. But let's see. If the bulls are confident, why could they not get a close above the moving average? That's my question for you, right? If this is bullish, if this is a buy, then why aren't the bulls buying? Why aren't they holding or buying more? Because you're gonna buy because you think the price is going up. So if the bulls think the price is going up, why wouldn't they be buying more at the moving average? Why is the opposite happening? That's my question for you, Rob. Feel free to answer in the chat. By the way, if you came and thought you're just going to be entertained and didn't have to think and practice and do some work here and learn some shit, you're in the wrong place, my friend. We're here to learn and grow. That is my world. If you're in my world, that is what we do. So welcome to my world. We are here to learn and grow. That is why I exist. That is why I wake up every morning. That is what I was born to do, learn and grow. And I believe that's why we are all here. So if you're here, that's what we're going to do. That means thinking, not just sitting here passively, and also not just coming here to get entertained. Because I know I'm a fun guy, but we're here to do work. We're here to work, baby. We're here to get better at trading, not just talk about trading, not just watch trading. We're here to get better at trading. And how do we do that? Thinking. This is a thinking man's game. So, Rob, do you see momentum? Momentum would mean that things would continue, or starting to continue in the same direction, right? Tell me if you see 2 consecutive bull bars, 2 consecutive buy signals since the open. The open's the dotted line. Tell me if you see more than one, right? If we're gonna get momentum, we need to start getting consecutive candles, right? That show that the direction is continuing. Tell me if you see any. Yeah, exactly. Also, if you want a nice cheat code, look at the average price. The average price is the blue line. It's the moving average, right? It's the average. It's called the moving average because it moves with the market, okay? But it's the average. You guys understand averages? What's happening at the average price, man? Here's the cheat code. Look at the average price and say, and ask yourself, more candles above or below? Answer me in the chat. You see more candles above or below the moving average? Anybody can answer this one. Once again, look at the, tell me, just look at the chart. Tell me what you see, right? People are going to see different things at sometimes. I think this one's pretty obvious, but you tell me what you see. Do you see more candles above or below the moving average? Oh. What is going on here? What is going on here? Sorry, just a second. Friends? Oh my god, this is so annoying. What's going on? Okay. All right. There we go. All right. I think we fixed it. Boom. All right, cool. Okay, so look now. Yeah, so I was getting ready to buy. I was getting ready to say I would, since this is trading range price action, I'd be ready to buy down here. And if I wasn't fucking with my chart, trading view wasn't fucking up on me. So because of how bearish this is, I'm hesitant to buy this. I might sell it, right? But now we're in the middle of the trading range, so it's probably better to do nothing. But if I had to do something here, I'd sell it, right? Because, well, because that, right? Sometimes the chart's easy to read, sometimes it's not. In this case, it's easy to read. Look at what happened when the bulls got to close above the moving average. It went down. Right. Look at when the bulls got a strong bull bar here. Bear sold it, right? So this is just showing you that the chart's doing what it's been doing. But that is a good close. We do have a double bottom with the low of yesterday. So the bulls want to continue to get some, and we have headed up right to the moving average here. But the bulls are lacking conviction, right? If we're gonna do what my man Rob said, which is, yeah, and Rob, you're right. More candles below the moving average. So more candles below the moving average, bearish. That means bearish. More candles above the moving average, bullish. Okay. So the bulls want to continue this momentum to the upside, but the momentum's weak. It's weak momentum, right? Let's see if the bulls can show us 2 consecutive candles. No consecutive candles from the bulls since the open. Bears got consecutive candles, got 3 consecutive candles here. They opened the day with 2 consecutive closes there. So it's like, bulls, come on, show us you're confident. If we're gonna put our money at risk here, I need to see institutions being confident. I'm not gonna be more confident than them. They got billions of dollars. Bears now with a triple top. So bears stopping the bulls there from continued momentum to the upside. Bulls buying that. But we gotta wait and see how this candle closes. So when we get around this area, like around the moving average, usually it's best to just kind of hang out and wait. Let's turn on the bar counter. Okay, so this is usually when the market starts to pick a direction. Cynthios, welcome back. Cynthios, what are you trading today? Bulls buying that bear candle, that bear doji. You know, I did this thing to my chart yesterday I really liked. I put on the scaling. Let me see if I can find it. Yeah, scaling. Yeah, check this out. Okay, I really like this. So I got the scaling turned on. It lets me zoom out real quick. Look at that. Boom. So cool. I can scale like that. I can, yeah. How great is that? Boom. Zoom out. Ah, okay. This is a big trading range. Zoom in. That's pretty cool, right? Trading View. If you want to get Trading View, hit the link in the description. I got a discount for you. I'm a huge fan. I did not used to use Trading View, but since I tried it, I'm like, oh man, This is great. You can plug it into any broker, which means if you change brokers, you don't have to change your platform, which that's what I want. That's what I want. Bull's continuing to buy, but we want to see how this candle closes. This is a slow moving market, so we got to be real patient. All right, so Cynthios is trading gold. By the way, you guys can follow me on TikTok. You can follow me on Instagram. You can follow me on X. It's all Trades by Bren. Looks like the bull's coming up to test this area. This is where the bulls bought yesterday. Okay, so this is what I want to do. I want to sell this. And I want a profit target at the ATR. Should be 5 points. And I want a stop loss about twice that. Okay, so I'm expecting this breakout to fail. And I'm expecting it to fail because we got a bull bar and then a bear bar and then a bull bar, which is a sign of trading range price action for me. So I sell the breakout expecting it to fail. I go for the ATR. I use my ATR indicator, which tells me that the ATR is 4.7. So that means I'm going to go for 4.5. Okay, so I'm going to put my profit target right there. And then as this goes my way, I'm going to tighten my stop. So I'm risking 300. For the possibility of 450. Let's see what happens. Rob, we're trading the SP 500 futures. So he said, what stock? All the stocks. 500 of them at least. Patience. We did it. 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 Okay. I'll do my money dance. 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 Okay, back to work. Sold this. Trading range price action. Sure. Rob, this is exactly what I was pointing out to you. So Rob, I did the opposite of what you were thinking, right? In other words, what we both looked at together, Rob, I determined the appropriate strategy because I said, look, the bulls are failing to get momentum. So if you see consecutive candles, consecutive closes in a direction, that's momentum, right? If you don't, then that's a lack of momentum. So when you see a big bull candle like this, right? And then the next candle is a doji, that's showing you confirmation that momentum is still lacking. So when we got another big bull candle, I said, you know what? Because we're going up and then pausing and then going up again, I think we're probably still in a trading range, which means that breakouts will fail and reverse back down. So the bulls tried to break out above the first candle of the day. This is the open of the day, right? The opening price. And we got 1 or 2 ticks above it. We got 2 ticks above the open of the day, which is right here. Okay. And then it reversed back down. Okay. So when that happens, I'm going to fade the direction. I'm going to bet on the opposite, right? So I'm actually looking for a push in one direction and then a strong push in that direction. And then I'm going to bet on the reversal. And so that's what I did there. So my strategy is to sell high. Okay. So if this is the trading range, right? This is the trading range and this is the halfway point. Then I'm going to sell in this portion and I'm going to buy in this portion. Okay. So that's what I did. I sold short up here. That's why I put the red arrow. Why? Because trading range price action. So that's how I trade trading ranges. Your mileage may vary, but if you're interested in my strategy, hit the link on the description or on the screen, tradesbybren.com/3setups, and I'll show you more examples of exactly how I trade trading ranges, how I trade breakouts, and how I trade pullbacks. All 3 listed in the document, which I give you for free just for being a part of my channel. So thank you for being here. That's that free gift to say thank you to you. Comes with a 15-minute video, by the way, detailed free training on how to actually apply the things. Sure. Why? Because 8 shows lack of momentum. Therefore, breakout likely to fail. And that's what I did. Now, in that case, it worked. That doesn't always work. Nothing always works. But that was the correct thing to do according to my strategy. So, okay, cool. Take a little screenshot for the trade journal. we take a bow for our role model, our trading role model here, Rafiki, showing us the way. Or Buddha, our friend Buddha. This is our black Buddha, our African Buddha. We gotta be diverse here. Make sure everyone's represented. Be right back. I'm sorry. You guys know about Palo Santo? Probably not. But maybe. Anyone heard of Palo Santo? This is Palo Santo. It smells so good. I also find this stuff kind of calming. You know, trading can be so stressful, so I like shit that just calms the nerves. Palo Santo's good for that. This smells really nice. Sometimes you gotta really light it for a long time though. There you go. There we go. Oh yeah. Oh yeah. Interesting. Bulls buying 11. I would expect that to fail. So I might sell that. 3 minutes left on the candle. Where do I put this? Up there. Okay. So it's the same trade here. Gone in a little bit higher than I would have liked. Moving average acting as support. But the trade would be the same. We'd go for the ATR, which would be 4 points. And I'd go for 3.5 because I got a kind of a shitty entry there. The reason why I still think this is a trading range is because of all the tails and the overlap. So So do you see how the bars are overlapping and they've got tails above and below? That's a sign of trading range price action. It's not a sign of trending behavior. And if it is a channel, which would be a weak trend, you can still scalp. You can still fade for scalps. Usually. So same trade there. Expecting us to come down and test these lows again. If we need to tighten that stop, we can. Minute left on the candle. Let's see what happens. Market deciding. Okay, so 11 is failed trend continuation. Sold 11 for failed trend continuation. 11 close. Same idea. Expecting whatever you would expect to happen in a trend to fail and do the opposite. That's what I'm expecting. Okay, bulls buying into the close. Not good. Super tricky. Super tricky. I'm gonna tighten that profit target. See if we can get out just for a point or two here. This is real tricky. Choppy. Choppy's the word. So we gotta be careful and patient. So what did I just do? I saw that there's strong buying at the moving average, although like despite the fact that this is choppy. Bull's getting the breakout. Outside bar. 12's an outside bar. We went outside. Sorry, 13's an outside bar. We went outside 12, and we went below 12 and above 12, making that an outside bar. So important not to freak out. I think we probably get 1 point out of that. Very important to wait till the candle closes before you make decisions, if you can help it. You can't always, but anything goes until the bar closes. Gotta wait for that bar to close. So we can get 1 point. "38 seconds. See if we can pull it off." All right, so there you go. And looks like we might have gotten our full. Let's see. What are we going for? 3 points there? We're going for 3.5. Either way, yeah, let's see. Another example of how patience pays. There's probably no truer phrase in all of trading. You know, 13 was a little scary, but that's just trading for you all day long. You got to be patient, and you have to be confident in your strategy. I'm confident in my strategy, and I know what I'm seeing, right? This is chop. Look at all the candles and tell me, if you look at these candles, do you see any candles in that circle that don't have tails above and below? No. Okay, so that tells me, okay, then another question. Do you see any candles that are not overlapping? No, they're all overlapping, right? That overlaps that, that overlaps that, that overlaps that. They're all overlapping each other. Okay, so that makes me confident that that's a trading range. That's trading range price action. And how do I trade trading range price action? I fade failed breakouts, right? So the bulls get a move up here, they get a pullback, and then it looks like they're trying to get trend continuation, so they got to close there, right? But I'm expecting this to fail. So in a trend, a pullback buy would be right here, and then you'd expect the market to go higher. But in a trading range, you do the opposite. So instead of trading this for trend continuation up, you fade it, meaning you short that for a failed trend continuation and a reversal down. Okay, now the bulls are still trying here, right? But so that shows you, look, there's buyers down here. You see that? Every time we got near the moving average, there are buyers. Boom, 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 boom. But look at the look on the upside. Same thing. Every time we got here, there's sellers, 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 sellers. Okay, so that's why my strategy is sell high or buy low. You feel me? You feel me, guys? Rob, you're very welcome. This is what I'm practicing, and we're both learning together, dude. Like, to pay attention to that much detail takes an enormous amount of practice. So I will be practicing that for many years to come, and it's a great thing in life is to like really be present and see all the details you can notice. It's hard to do, but it's worth it. Okay. Cynthia's, I'm not sure what you mean by my trading view layout. I really don't understand that. Hey, Michael. Hey, Michael, keep in mind that I've got a job here, which is to trade well, and that takes an enormous amount of concentration. So don't come in here thinking that I'm ignoring you because I'm paying attention to, because I'm trying to do my job. Okay, Michael, I'm trying to do my job, dude. I'm not ignoring you. If you want to give me your money, hey, Michael, if you want to give me your money, I'll trade with your money, and then I can just be as lazy and casual and loose as you want me to be, okay? Come on, dude. Okay, so let's get to your question. How long did it take you studying before live trading? 3 years? When? When? And that's good that we shortened our profit target there, because our initial profit target would not have gotten hit. And I saw that we were getting higher lows, so that helped me. But I don't know what's gonna happen here. It's kind of weird and choppy and difficult to see. Yeah, this is tricky, guys. I'm expecting the bears to start selling. Well, look, here's what I'm expecting. Okay, currently, this is what I'm expecting. I'm expecting something like this. My layout. Okay, Cynthios, I'll look into it. What is it that will provide you? Just my indicators, or just curious why that would be valuable to you? I started swing trading. Yeah. And you can Venmo me. If you want to donate, you can Venmo me, ZenBren. My Venmo is ZenBren, ZenBren. Okay, so, well, no, I'm staying out. I'm staying out. This is not good price action. Now, if you were gonna buy, that would be a bad idea because it's so choppy and then we're near the top. You'd want to do the opposite. But it's not. Well, let's see. Let's see what happens on 15. You actually have a wedge top. You see it like that. 1, 2, 3. I don't think this is a good buy or a sell. Not. I can't see it. I can't see it. When I can't see it, I wait. I wait. How about Nvidia, guys, huh? How about that Nvidia? Bitcoin? I'm looking for a trade on Bitcoin. Prior low. Waiting for a bounce. Waiting for a bounce. Reasonable buy there. That's exactly what I was waiting for. Oh, I missed it. Yeah, okay. That's not a bad buy. But that's a lot of down. Those are sells. I actually called this up here. Proud of that. I guess this could be a buy, but I'm not taking that. That could be a buy, like down there, but I'm not taking that. So I think you just wait here, or you just end the session. Let's see if the bulls buy here. I think they might. Let's just put a line. Or here. Probably better than that. Here. That's where you buy. Or here. Phantom. Where's my Palo Santo? Oh, Cynthia's. Okay. So here, I'll show you how to find these indicators. Anyone want to use my indicators? You can use them. Just do this. Go to indicators. And type in bar count and Brooks EMA. Cynthia, let's check it out. Bar count. Bar count and Brooks EMA. Type that into Trading View. It's right there. Bar count, one word, ampersand, Brooks EMA. And if that still doesn't work, type J with 2 Y's. Phantom. Phantom. Caroline. Thanks, man. Michael wants my Venmo, so there it is. Okay, so the question is this a good long? I don't know, man. It could be, right? But we could test back down to here. We could test back down to here. So I'm hesitating because I can see. This is really tricky, man. Trading ranges are tough. Tight trading ranges are tough. That's a 5-point tight trading range. That's tough. And I want to buy here. Let's switch to the 2-minute and see what's up there. I will not be buying here. Why? Because you're in the middle of a trading range. You got 2 trading ranges. I can point them out to you guys. Look. I don't know if you guys find this helpful, but hopefully you find this helpful, but this whole thing's a trading range, right? This whole thing. Because we went down and then we went up, right? So we're not moving in a continuous direction. We're staying in this range. So that's a trading range. Okay. From the open, down, and then all the way back up, a little bit higher, and then back down again. Okay. But there's also another trading range, right? So this is a trading range. So we were just trading that trading range. So you've got a trading range here and then an overall trading range there. Now, this might be a good buy, but because there's buying here, right? So if you buy a little bit below where there was buying before, sometimes that'll work, but it's just a bad location for a trade. The middle of a trading range is a bad location for a trade. Now, will there be buyers at 50% of this candle? Probably, right? There'll probably be buyers here, but let's see. When I get nervous, sometimes I'll go down 2 points. So if it's 23, I'll go to 22 or 21, right? But let's say you bought there and you went for the ATR. So you're going for that. We could test here, we could test here, we could test here. So I'm not buying here. I'd rather buy like here. Will we get down there? Maybe. Maybe not. And then my stop is typically 6 points. It's typically twice the proper target. Because that's how scalps work. If I see a big bull bar like this, I usually think that there will possibly be buying below it. I mean, you usually see it, right? Like, look at this big bull bar. As soon as we got a couple points below it, boom, big move up. So if you're gonna buy, that's what you want to see. You want to see rejection. Yeah. Let's see if the bulls get a close here on the 1 minute. $20 seconds on the 1 minute candle. Michael says it's time to buy. Michael, you're eager. That's a dangerous quality in trading. Better to be skeptical. That's why I didn't buy. That still might work, but let's assume we test down here. So Sana. That could be a great trade. Testing down here. Trading range, buying low. That's what we want, to be buying the very low. So that's more like what I want. Also, bulls bought twice down there, right? There's a double bottom there, which is much better than... Okay, stop talking. Let's wait and watch. Oh, I don't know, man. Let me check. It is locked. Ah, it's probably because it's premium, dude. I think you need premium, my friend. Use the link in the description. Support the channel and get that premium. I'm assuming you don't have premium, is that right? No, that's not what I want. That's what I want. Cynthia, let's try this link. That didn't work. Source code. How do you link to a... link? Copy link. What's happening with our chart? Okay, Cynthia, let's try this. I found the link somehow. Yeah. If you guys want my indicator, try that. See if that gets you there. That might do it. That just might do it. You also might need premium. I don't know. Okay, bar 18 trying to reverse and going a couple points below 17, getting the push up. I thought there might be bars at 50% of this guy. That's exactly what we got. Big bull bars like this, often there'll be traders waiting for 50% pullback, and there were orders waiting at 50% of this guy. You can see that if you measure 7, check it out. That's 50%. Buyers right here, buyers right here. Okay, it was also the, you know, where there was buying before at 62. But I'm hesitant to buy still. See if 18 is enough for the bulls to start buying again. It might be, but it's not enough for me to start buying. That's for sure. I just don't like it. Sometimes you look at it trading and like, yeah, I don't like it. And I think I told you guys why. We're in the middle of the trading range. This is the trading range, right? This thing. That's why I got the yellow box. And you're right in the middle, which is how you get killed. You just stay away from the middle. I'll buy down here though. Or I'll sell up here. Okay, Cynthia, let's try that link and scroll up. Click on the link and scroll up. You gotta scroll up when you click the link. But that should get you there. It just got me there. Excellent connection. Thank you. May we all have excellent connections today. This is so boring. Again, I buy here. Checking my levels. 1 2 1 2 1 2. Checking my levels. 1 2 1 1 1 2. Check check check. Good. Okay, so if you took that buy, you just made a few points. Remember, line was there. We said let's go for ATR, which would have been 3. There. Risking 2 points to make 3, not bad. Now you might get the move up, but the average is the real barrier here for the bulls, right? Look at that average here. Couldn't get it. Look at here. They even got 13 points above it, and then boom, bears came in selling, and that was the high of yesterday. See that? And that was up here. Like every time, look, every time the bulls get around the average, the bears just won't let them get very far. Even when they get 15 points, right? This should have caused a breakout to the upside, but it didn't. Instead, the bears got the push down. We started the day by analyzing that. Two consecutive bull bars. 18, 19, but can't close above the moving average. So that's more of a sell than a buy. And if you went for 3 points on that, you wouldn't have even gotten that. So I should know. Bulls now have a higher low. Somewhat in line with the close of yesterday. That's a wedge bottom. So bulls got a double bottom down here. Now they got a wedge bottom. So that's a reasonable buy, actually. Didn't even notice that. Yeah. That's a reasonable buy. Wedge. Okay, so if you did buy here, as I said, you got that 3 points on the next candle. All right. You would have had to wait, well, 10, 15 minutes. You get that 3 points. Okay, so now we're looking at a possible breakout. Okay, good. That's what we want. This is a tight channel. It's a breakout. Or a tight channel. 4 consecutive bull bars in a row. This is a 2-minute chart. In a tight channel, usually the first pullback will, the first reversal will fail. Meaning, in a strong move up like this with 4 consecutive bull bars to the upside, the first time the bears get a close, usually the bulls will buy it because that's a pullback buy. First reversal, tight channel. First reversal, usually minor. Bulls will buy it because there's buyers waiting on the sideline after a push up like this, waiting for a pullback to get in. That's how that works. And this is probability. These are not guarantees. So you always got to wait and see what happens. But that's the intel. We could also see this as a failed breakout above this channel or this trading range, or this whole thing is a trading range. Right? You can see it 2 different ways. You can say this whole thing's a trading range, and this is the breakout failing above. See if there's bars below 22. And let's tighten that stop just in case. We're risking less than 1 point at this point. $50 seconds on the close. Bears gaining momentum. Usually when this starts to happen, you don't see a strong bounce. When the bears start gaining momentum, you usually don't see a strong bounce. Well, let's see. Not gonna overthink it. Buyers into the close. Buyers into the close. That's good for us. Very good. Anything can happen in the last 5 seconds. Anything can happen. Let's see if the bears can close below that close. No. All right, so we're going to see right here what happens. See if buyers come in. Buyers are already coming in. Switch to the 2 minute, you could see it. Yeah, okay. Switch to the 1 minute, you can see it. There are buyers there. So as soon as we got below the average price on the 1 minute, there were buyers, but that's a strong bear bar. So let's see what happens here. Now we're risking 1 tick. This is downside momentum. Yeah. All right. So lost 1 tick on that, but no problem. It's very possible we could find buyers here. But I've just found it's better to protect your risk and roll with the punches, baby. We roll with the punches, baby. Super tricky to trade this. And I was going for a 6-point move there. 12-point move, really. Thinking we'd come up and test these highs here, which I think we will. I think we will. Right, because we tested here, but we didn't test here. And, you know, technically we're in a bull channel. See that? But weak bull channel. So in a weak bull channel, channel's a trend. It's also a trading range. It's a little confusing. Don't worry about it. But in a weak trend like this, bulls take profits at new highs. So that's what happened here. And then they buy again lower. So that's what's happening here. Okay. So today, 2 wins, 1 break even. I guess we took 1 tick loss on that, which we can call that break even. It's basically nothing. And not much going on this morning, guys. I mean, look at this. The whole thing's 15 points. So this is a slow moving market that requires an incredible amount of patience. Many days trading, in fact, most days trading are like that. They require an incredible amount of patience. This is not something that is a get rich quick scheme. If you're looking for that, you're in the wrong place. This is not something that just happens when you want it to. This is extremely it's extremely dynamic. Anything can happen at any moment. And the markets are often not doing what you want. Right? So what do you do on days like that? On days like this? When it's just slow. Well, I don't know what you do, but I'll tell you what I do. I'm just patient and disciplined. Patient and disciplined. That's it. And you just relax. You don't take it too seriously. You follow your rules. You exercise discipline. And then you just come back the next day and see what happens then. So that's what we'll do. Thanks for being here. I appreciate you. I'm Bran. And no, I'm grateful for you. And I'll see you next time. Every Tuesday and Thursday, 7 a.m. Pacific. If you like this stream and you want to get my trades, go to the link on the screen or in the description, Trades by Bran. I'll show you the 3 patterns I look for. I will show you the exact strategy that I looked for to get these 2 wins here. And I'll tell you how I limit my risk and how I take my profits so I can get out before it's too late. All right. Thanks for being here. I'll see you next. I'll see you on Thursday. Thursday, 7 a.m. We do this every Tuesday and Thursday, 7 a.m. So we'll see you Thursday. Much love. Brand